Okay, good morning, Mel. Thanks for joining. Really appreciate taking the time to come onto the show.
It's a pleasure, Nick. Thanks for having me.
So you're a senior partner at Dreamit Ventures, which is obviously a well-known venture capital company that invests in largely pre-seed in the cybersecurity startup ecosystem. It'd be really good to get your take and sort of viewpoint on how you see people, founders, taking a product to pilot, and I guess what makes a cybersecurity startup enterprise ready.
Okay. Yeah. So Dream Adventures, yeah, we mostly invest at the seed stage, seed extension. Uh, Once in a while, we will do pre-seed, but typically we are looking for early signals, from companies that there is a product market fit of some sort. Of course, we'll help them through the process. Coming back to your question, how do you bridge the gap, right? How do you go from pilot to product? And I think the most important thing is we ask startups, or what we look for in startups is, are you solving a hair on fire kind of a problem
Mm.
with measurable outcomes? Uh, because at the end of the day, the CISOs are going to buy something where they have a critical need. And we're looking for products who are delivering values and outcomes in must-have categories. Uh, Sometimes nice to have categories we feel that have a slightly longer term trajectory, maybe 3 years out. But that is again uh, all of these products have to solve measurable outcomes. Either it's reducing MTTR, fraud, reducing the audit findings. At the end of the day, every CISO has to show the ROI to their board.
Yeah.
So if that is a really important part, of course.
Yeah. So I guess how can, from your viewpoint, then how can founders sort of bridge that gap from their initial idea, whether it's to ex sort of product managers in a bigger organization, or they've gone through the startup with another founding group, and they've got this great idea, and they kind of test cased it to a degree, but they want to take their own idea and then sort of travel along that journey to try and get customer traction. What would your sort of advice be to people in that at that stage?
I think the number one thing, Nick, is that every founder should start with design partners. And
Okay.
when we meet startup founders who have spent 2 years, 3 years, and they tell us that they don't have a design partner, they've done it because they have a lot of experience in the field. That's usually a big red flag for us because we have all been there. Some of us who have started companies in the past, and finding design partners is a hard thing. You need to kind of come out of your comfort zone. It's going to take a lot of calls and a lot of efforts to find the right kind of people who have that pain and who are willing to work with you and give you the time, right? So you should have 3 to 5, at least 3 design partners and target KPIs, that you can then demonstrate to those design partners, but also make those design partners then referenceable. I think that's a really key ingredient for any startup founder. Um,
Yeah. Okay. And in the model then of the Dreamit model, I know that you guys have got sort of a customer sprint, an investor sprint sort of acceleration program. How does that work, Mel?
Yeah. Uh, the sprint process was year before I got here at Dreamit.
Yeah.
And the thought was, and I've certainly come to embrace it a lot. I really like the process. So it's a two-part process. One is a customer sprint, and there is an investor sprint. These are actually platform processes.
Mm.
As an early stage investor, these in the early stages, the funds are typically smaller. So you don't see a lot of venture funds providing this kind of a process. There might be some ad hoc introductions, but it's really important for us to run this like a process for all our companies. So first is the customer sprint. The question we ask ourselves is, in that seed stage where we play,
Mm.
what is the most important thing for these founders? And almost always it's customer traction. They want that early customer traction. So for us to be able to effectively leverage our network, we spend a lot of time and energy building that network of innovation partners, typically decision makers, C-level executives, CISOs mostly in our case, and who can validate the urgency, the readiness, give critical feedback to them. So we position them as innovation sprints slash customer sprints. So depending on the stage they are in, they might land a design partner, that might be a goal, or they may have a prospective customer right there. At the very least, they'll walk away with great feedback from these. We take a lot of pains. We run about 4 customer sprints a year. That means 1 every quarter. And for the startups that are going on the sprint, we try to get them 10 to 12 really good, solid, curated meetings. We have done our homework ahead of time. We have talked to the CISOs, what the pain points are, and make sure that the time spent by the CISOs, the founders, and us, all of us, is kind of used properly, and we get the most value out of the time. So
Okay.
that's number one, right?
Yeah.
The customer sprint process, right? Getting that early traction. But the other part is fundraising. Several founders, might have a lead already. We don't lead rounds by design. That's kind of our risk strategy. But they also need a lot of help in fundraising. And we really, really help shorten that time frame through our process called investor sprints. Because we don't lead, again, by design, we play very well in the startup ecosystem. And we, just through Fund 3 and 4, we have co-invested just on cyber alone with over 140 institutional investors. So they all know us well, we play really well. And when we set up an investor sprint, usually we end up 30, 35 meetings for these founders in a compressed time frame, in this 2-week time frame. We call them sprints because we do everything internally at Dreamit as sprints, which is everything is measured, even our own work within 2-week sprints. And that's how we run our processes, like the customer sprint and the investor sprint.
What's the success rate, would you say, then, with founders going through that type of process, and the failure rate, and what I guess you look out for, for mistakes to avoid?
I think over a period of time, we have gotten better with the process ourselves, because of course, there were lessons learned. And one of the things I mentioned is curated sprints. That's a very heavy lift. If these sprints are not curated, the outcomes may not be great. So all our sprints at this point are pretty curated. They sign up to meet the founders that they really want to meet, and nothing more than that. I'd say the success rate is pretty good.
Yeah.
But at the end of the day, it all depends on the founders. We are able to open the doors, but they are the ones who have to finally do the pitch. Of course, we have made sure that we work closely with them. They have to pitch, they have to follow up, the product has to live up to the expectations, all of those things, right? And to work with the CISOs and their teams with the understanding that they're all going to be busy, and how are you going to capitalize on all this? So it really comes back to a lot to the founders. We tell them, hey, we flip the question usually and ask them, if I get you 10 really good meetings, how many do you think you close? Right? I think that's a question for the founder. So we have seen some startup founders do exceedingly well, and some of them, just they were not that good at follow up, and they couldn't keep that. They couldn't get the most out of it.
Yeah, and with that, then that leads into my next question quite nicely, with what VCs sort of typically look for in cybersecurity startup founders, in terms of traits and character and that kind of stuff. What are the key drivers that you look for, Mel?
Yeah. So coming back to the team, right? We see a lot of founders who are technically pretty competent, because many of these founders, we see them coming from a technical background, but we like to see a good mix of the founders, have their commercial abilities. Like I just mentioned, right? We want to see fire in the belly. That's how I put it, right? That their life depends on it. They're going to do everything it takes, to close these deals. And that's I think one of the most important ingredients for us. So the team composition, whether they're well-rounded, can the founding team by themselves, if they didn't have any other help, do they have all the skill sets that are necessary to build the product and sell the product? That is what we typically look for.
Yeah, and I guess it's finding out what their why is as well, isn't it? It might be a great idea, it could be needed out there, but if you're a founder and you're going to do a startup and enter into that kind of 2 or 3 years of chaos, organized chaos, non-stop activity. You've got to give everything to that, haven't you?
Yeah, and I'd say, Nick, it's more than 2 or 3 years.
Yeah,
I,
yeah,
I,
I know.
I've been in the battlefield myself, and I have a lot of scars to show. Um, you should be prepared for a 10-year slog.
Mm,
That's what I tell the founders for a good outcome
yeah,
and to build a good product. And the other really important thing for us as investors is that is a deep intellectual property. Are you building something, a deep defensible moat? We want great founders with the right ingredients, but I think the really important thing is, are they, um, they should not be feature clones of other products. They're building something unique, differentiated, and a very strong defensible IP.
yeah. And I guess, what would be the key trait that sets an entrepreneur apart from some of the other ones? Is there something that stands out straight away to you and your colleagues that you think we've got one here?
Yeah, for one, the domain expertise that they've come
Mm,
from, and then, like I said, in simple terms, fire in the belly.
yeah,
Uh, we can see that in our first and second conversation. That comes across pretty loud and clear to us that these guys, life depends on this. They're putting
mm,
everything in it, and they're ready. They're in the game to win it.
yeah.
Um,
And when you say putting everything into it and like, got the domain expertise behind that as well, are you also looking for any kind of financial contribution, from them, other angel investors and so on? Are you looking for that commitment?
Not necessarily, but it depends. Uh, if we know that these founders have had a prior track record, they've had some exits, then we expect that they will bootstrap their next company to a certain extent,
Yeah,
and they will show that skin in the game. Uh, but if they don't have that track record, we don't expect that they will have a lot of cash in the bank. So it's totally okay to raise an institutional round at the pre-seed stage,
yeah,
without having put so much capital. But certainly, we do want to see some skin in the game. It can be that they want in the first, second, third year, while the risk is very high for everybody around the table, including the investors,
mm,
they need a market salary at that point in time, right? They have to be giving something back, right?
yeah,
And that's one of the things that we definitely look for.
yeah. And I guess, segueing into sort of the big question, isn't it? When you get these really, bright entrepreneurs and founders, and they've got this domain background and great product, and the big next step is the go to market piece, the customer piece, and maybe they're not always, if they haven't gone through a startup before, this seems to be the big kind of like hurdle barrier of experience, isn't it? So you've got people that may come to the table that it's got a really good product and it's not just another mirror product or something else. It's really got legs on it. How do you get people and that type of individual co-founders, if it's two of them, two or three of them? How do you get that idea and that concept to being able to build out a go-to-market strategy and give them the tools to be able to do that?
Yeah, we'll look for gaps in their experience,
Yeah,
whether it's and especially on the go-to-market side, and we'll try our best to fill those gaps up. Uh, Either it is related to team composition or their understanding of the ICP. So the first ICP is the initial customer profile. So the very first thing we do is, once we feel that this is a strong team with a strong product, um, we'll work closely with them to map out who that customer is. What does that customer profile look like? It's called customer segmentation, right? So from the first call, the first thing that we end up doing is double and triple down on the ICP. Now, of course, myself and my team, we have spent 30 years in cyber. We
yeah,
have some gut instincts. We are always talking to CISOs. But at the end of the day, we still need to prove it out. So during the custom sprints, the most important thing we are doing is we are testing the customer segment and the ICP. And if it's a strong match, things are going to move forward pretty quickly. Otherwise, we have to huddle back and try another playbook, which might be slightly different. Um, so that's how we kind of approach it. That's what we expect our founders will do, because once you have figured that ICP, then it's all about putting all the energy behind that specific playbook.
Yeah.
Um,
Yeah, and with I guess when they're moving down that road and they've got some investment, whether it's through a VC pre-seed or other methods, and they're looking to then sort of stretch that and start bringing people in and product marketing managers and directors and that kind of stuff. What advice do you give to founders in terms of what their first hires should look like, who they should be?
yeah, for one, like I said, right, we expect that the founding team should have the skill set to be able to build a product and sell it.
Mm,
And everybody else that they bring on board is to help them scale. They should know, the CEO should be able to sell the product, right? And that's a really important thing. Um, so, and you know, I really push back when they want to make a lot of hires early in the
yeah.
process. Our expectation is that the founding team plus a few other members, should be able to get the company to Series A. So typically a team of 8 or 10 should be able to get it to the point of a Series A. And until that point, it is founder-led sales. You have to prove it out and then bring the people in to sell. But it really depends. In a technology company, they might be lacking some uh, people on the product side
Mm,
and product engineering side, and there are key holes that they might want to fill. I usually don't recommend head of sales early on. That's a post Series A thing. Once you've got the Series A money, you might need a sales engineer though,
yeah.
right? Somebody who can speak the talk, who can help you scale, do more demos when you're not available. But for the most part, our expectation is that the early founding team should be able to do everything they need to do. Um,
Yeah. And do you have like a typical time frame? It's difficult to say, and I'm sure it's not for every case, but if you're sort of looking to you're looking at an organization that kind of maturity, but you're looking for them to get to Series A, do you kind of guide a timeline as to what that should look like?
it depends, but usually, if they can, uh, you know, we'd like in the once they have released the product
Yeah.
from pre-seed to seed, we expect it should be in the 12-month time frame, and that would be a good trajectory. It would get the investors excited that they're making great progress, and from
Mm,
seed to Series A, probably another year to year and a half.
yeah.
That's our expectation. If sometimes the market conditions, for early stage companies who are bringing a product to market that is new, there is no, analyst category to track. They could face some headwinds, and we would certainly account for that. Sometimes they would have to pivot. But if everything goes well, like I said, first 12 months, another 12 months, and they should go from pre-seed to seed to Series A.
Yeah. Yeah. Another skill set for these founders to have. So again, when these organizations are starting from the ground up, um, I guess some founders may be a little bit less mindful to make sure from day one all the compliance and the risk piece and building that credibility is built in from the very offset, because maybe they're quite siloed into the product and product and product, but you've got to be looking at that sort of outer layer as well, haven't you?
Yeah, no, absolutely. There are risks for the buyer,
Yeah.
and those risks should be front and center for the founders as well. They should put themselves in their shoes.
Mm,
If you have not done the right kind of integrations or the right certifications, it's going to be a non-starter for the CISOs. They cannot put that product in production. It's out of question. Uh, if you have not figured out, how you're going to show value without business disruption, like data exposure, downtime, configuration instability. Sometimes product need production data to prove their worth. Those are all roadblocks for the CISO, create friction. Uh, Other things like, if you have built great technology on a non-standard technology stack, uh, for example, the skills are not available within the enterprise to be able to manage that on their own if they're supposed to. That is problematic. All those things have to be well understood, and the CISO is going to have his own product roadmap and vision of what he needs to get done, what the pain points are, and you have to be able to really align yourself with the customer's roadmap, your roadmap with the customer's roadmap, right? So these customers should help you shape your roadmap as well.
Mm.
So I think that's how you start to build trust, right? No business disruption, ensuring that all the certifications are there. Right from the get-go, you don't work on technology stack that as you might know well, but it is non-standard, for the person you're selling to, and of course, roadmap alignment should be also is also very important.
Yeah, yeah. Okay, and do you see any kind of like geographical sort of, I don't know, landscape where there's more founders coming through, whether that's in, state of California, Texas, and Northeast? What does that look like from a VC, Mel?
Uh, we invest only in US based companies. Of course, the bulk of the cybersecurity companies is US and Israel. I think London is and UK is really coming up. Unfortunately, we don't invest. We invest in US based companies. So
Yeah.
even if it's a UK based founder, and I've met some recently that are build really good products. Uh, they've gotten smart as well because they know there are some limitations from an investment perspective, unless there are very large funds that they're talking with who have global scope.
Mm.
They might want to incorporate in the US. So we don't have any problem with founders being in other geographic locations as long as it's a Delaware corp. It's tax related stuff and other things that kind of get in the way for us, especially if you're not a big fund.
Mm.
But uh, 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 I think from a geography perspective, Northeast versus West Coast, uh, I think we see pretty much equal number of startups. I'd say it's a 50-50 split for us, pretty much.
Okay.
We have West Coast based startups and East Coast based startups. The DC area is extremely vibrant in cybersecurity. So we have a bunch of startups from the DC area, but in the Northeast corridor, DC, Philadelphia, New York, Boston, and then of course the West Coast. But we have startups everywhere in the US, I think, at this point.
Yeah, so quite balanced. Okay, that's interesting. And looking ahead, obviously, everyone's talking about AI and how disruptive it has been and beneficial as well. But it obviously causes next layers of tech and next layers of founders and new companies coming through. So there's lots of opportunity as well off the back of some of the problems it might cause as well in the cybersecurity space. But what excites you now in terms of sort of the next wave of cybersecurity technology startups?
Yeah, I'll dial back just a little bit. Uh, uh, I've formerly been a CTO founder myself, and one of the gripes I have about my previous 30 years working in cybersecurity building products is that I always felt that we were a little bit behind, where the technology was in general, the cybersecurity industry per se,
Mm.
and we were not at the cutting edge. But I think that is starting to change. And the kind of startups that I'm seeing now gets me genuinely excited. And there are, of course, there is AI is fundamentally changing things for everybody, and it's doing exactly in the cybersecurity world as well. As the threats, the threat actors are leveraging AI,
Yeah.
so are the defensive tools. And I'm excited about what AI can do for the security operations center in terms of the automation that's now possible, that it wasn't even possible just a few years ago. Uh, uh, so certainly the vision of an AI SOC is top and center uh, because I've catered to that audience for a long time. And I'm starting to see the agentic automations that are getting in
Mm.
really, they're starting to show some great signals. We have some investments in these areas, and they're starting to make really good inroads with customers who are really seeing ROI and getting value out of it. So that part is definitely exciting. I think the other thing in my days, we focused a lot on protection and detection, and a little bit less on resilience.
Mm.
And I think there's a pretty strong understanding that resilience is actually a really important factor. That means business continuity, for the CISO and for the business. And everyone has to assume that they're going to be compromised at some point. So how do they get back and operational very, very quickly? And that is a really important factor for the buyers. And there are lots of startups now who are starting to address that beyond the detection and the protection, which is also kind of exciting for me.
And who do you see currently winning that battle with AI tech between the good and the bad?
You mean specific names of specific companies?
No, just generally in the marketplace. I mean, do you see that, AI is obviously evolving very quickly, and like you
Mhm.
say, maybe in a year, 2 years, there'll be some really much more advanced technology out there, and cybersecurity tech will change with it. But obviously, the bad guys have got they're using AI just
Right.
as successfully, aren't they? Who would you say is winning that battle at the moment?
I think it's a constant battle,
Mm,
and uh, uh, you know the attackers always have a little bit of edge, because they just need to compromise the weakest chain. We have always known that, right?
yeah.
Uh, so when you look at the threat landscape in an enterprise, the threat landscape is so huge to ensure that every part of the chain is secure is exceedingly hard, because these are dynamic enterprises. Things are changing every day.
Yeah.
And new products are being deployed, new technologies are being used. So the attackers will always have a leg up. But the defensive solutions are starting to use AI and fight AI with AI. And that's really where everything is headed, because I think the human interaction, uh, while it will still be required, the speed and volume of the attacks makes it almost necessary that many of those 98%, 99% of them will have to be stopped with AI. Um,
Mm,
certainly for investigative work and other things, the human will be required, but that's certainly where it's heading. The deep fakes, the phishing attacks, they're all getting just exceedingly sophisticated. The ransomware,
yeah.
they're all getting exceedingly sophisticated. There is no way humans can keep up with that level of volume. We couldn't do that even years ago. And now it's almost impossible.
Yeah, we're really seeing a rise on the deep fake side, definitely. So yeah, I think it's going to be interesting, isn't it, over the next year or two for sure. And I know that you guys are very active in sort of the ecosystem building, and you're always connecting founders with, as you say, VCs and corporates across the sort of ecosystem piece. And have you got sort of any kind of what the next sort of 12 months looks like for startups coming through? Is it looking strong?
I think it's looking strong. We're looking at a pipeline, and there is no shortage on the
Yeah.
pipeline side of things. One of the things we are certainly seeing is that the valuations have stayed pretty high, uh,
Mm,
and uh, uh, and we are seeing a lot of growth stage investors trying to get a little bit early. The funnel for them had been a little bit narrow,
mm,
so they are trying to move a little bit downstream, and certainly keeping those valuations a little bit higher. Um, it's not great for the industry or the founders at the end of the day. It has to be the right price. And that makes it um, uh, makes the whole ecosystem work properly.
yeah.
Um, so we are seeing some of that. Certainly, like I said, the growth stage investors trying to get a little bit early. But at the end of the day, I think the quality of the startups is good. But the winners, it's for the winners, it's not just going to be about finding threats faster. It's about going to be making sure that the fundamentals are taken care of. They can ensure business resiliency. They can ensure compliance. They can ensure create confidence in the face of inevitable compromises. And like I started off by saying, it's going to take founders with fire in their belly to really shine over the rest.
Yeah, excellent. Okay. Thank you, Mel. Really appreciate your time. That whistle stop tour of what it looks like out there at the moment. And if people want to reach out to you, how can they find you?
I'm very easy to get in touch with. I'm on LinkedIn,
Yeah.
and I almost always answer any LinkedIn connection requests. I answer emails as well, unless somebody's asking me about healthcare, and then I don't answer because I get too many of those as well. But if it's anything related to cyber, any founder, they're assured that they will always get a reply.
Nice, excellent. You're very active. Brilliant. I really, really appreciate it. We'll keep in touch. We'll maybe revisit in a year, see what it looks like. But again, once again, thank you, Mel.
A pleasure. Thank you.